What's up everybody? Nate here. So the stock market is sinking right now. In fact, over the last month or so, the stock market has done nothing but go down. This has led a lot of investors and experts to wonder what the heck is going on with the stock market. I mean, the pandemic in the United States seems to be going away. Some companies are reporting really strong earnings, and consumer spending in the United States seems to be holding steady for now. So if all of that is true, then why is the stock market posting some of its worst days since the height of the pandemic all the way back in 2020? Well, there are three major things that are keeping the stock market down right now, and today we're going to discuss all of them, and we're going to go over what is going to happen with the stock market next, and more importantly, if it's going to continue to go down or if it's going to start going back up again. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now let's go over number one. Earnings. Now, I mentioned before that some earnings for some companies have actually been pretty positive, but this has not been the case across the board. What you've got to understand about the stock market in general is when investors put their money into stocks, they're basically betting on the future of our US economy. And more importantly, they're betting on the future of companies. Every single quarter, companies are going to release something called a quarterly earnings report. This shows the public and more importantly, investors, how that company performed over the previous quarter. Everything from losses to new costs to revenue and profits are reported on these calls. And lately, some companies have had really bad earnings. Just recently, we saw Alphabet or Google post much lower earnings than expected. In addition, Boeing fell out of the sky on its earnings report. And Robinhood, a company that recently just launched its IPO and became a public company, announced that it was cutting a large portion of its staff on its earnings results. And that's just three. So why exactly is this really concerning for investors? Well, investors have their money tied up in these companies, and if these companies start losing a lot of money, then investors are also going to lose some cash. And more importantly, it could be a sign of things to come. As these companies start losing money, there is a reason for that. Sometimes it's just bad business decisions, but a lot of the time it's because of our economy in general. So investors are keeping a close eye on earnings reports. If they continue to be really low, then investors are going to start pulling their money out of the stock market. And they're also keeping an eye on CEO expectations. If you see all of these CEOs of these companies that are having bad earnings reports basically come out and say that they're cutting their expectations for the rest of the year, well, again, there's a reason for that. And it means that investors and that stock is probably going to go down. Company earnings are going crazy right now because of inflation and supply chain issues and the dissatisfaction that consumers have with our economy. The big fear is kind of a confusing one because some outlets are reporting that consumers are continuing to spend a good amount of money, but businesses are not able to catch up right now. In addition, we have things like the Great Resignation that is keeping many businesses from producing enough products. This means that even though companies are trying to cut costs by raising prices, they haven't really been able to do that, and they're taking on way too many costs. This means that their profits and revenue are getting eaten into, even though consumers are still spending at a similar rate to what they were before. But that alone is not keeping the stock market down entirely. Earnings reports are very important, and what they basically show investors is what the future of our economy and the stock market is going to look like. If earnings reports are bad and company CEOs say they're going to continue to get worse, well, that means that investors are going to start losing a lot of money, and more importantly, it means that our economy could be going into a recession. Businesses now have to start raising prices even faster in order to cut those costs even more. Because the fact of the matter is, a lot of businesses have to produce more right now because demand is staying steady. People are still buying at the same rate that they were in 2020 and in 2021. Supply chain issues have meant that businesses simply cannot keep up though, so they're taking on way too many costs, which means revenue is going down. But they can't raise costs too fast because then Americans are not going to have enough money in order to to purchase their goods. So they have to kind of keep everything consistent while at the same time raising wages so that Americans can buy at the same rate. And another thing I want to mention about earnings reports is that when these big companies like Alphabet and Robinhood and Boeing start to tank on the New York Stock Exchange, well, that's a big deal, mainly because these companies hold such a large portion of the overall market cap of the stock market. An honorable mention here is Tesla. Tesla has tanked over the last few days because of the deal between Elon Musk and Twitter. If you haven't heard, Elon Musk is buying Twitter for $44 billion. Elon Musk is taking on billions of dollars in debt in order to buy that company. So now he has to make debt payments to a series of banks. However, Elon Musk is the largest shareholder in his company Tesla, and if the stock of Tesla starts to tank, well then where is Elon Musk going to get the money in order to buy Twitter and pay back his debt? He's gonna have to sell a lot of his Tesla stock, which means if there is a big sell-off like that, that can create a big shift in Tesla in general. A lot of those shareholders are gonna be left on the hook. Since Tesla is a $1 trillion plus company, well, them going down is also going to push the New York Stock Exchange down. So like I said, you have the earnings side, and then you also have the consumer sentiment side. Consumer sentiment is still pretty flat or just above where it was before, so that is a positive for the stock market. But the negative is that it looks like companies are going to have to start raising prices even more because inflation is so high right now. And speaking of inflation, that is the second thing that is tanking the stock market right now. In March of 2022, inflation hit an over 40-year high of around 8.5%. That means that the general prices for consumers is going up, and the buying power of every dollar that they have is starting to go down. In short, consumers have to now pay more for just about everything. And like I said, for the stock market, this means that the future of our economy is in shambles. Right now though, even though inflation has gone up, consumers continue to spend. And I think for a lot of different reasons, consumers have to spend. There's a lot of things that people need every single day that they simply can't avoid. And for a lot of consumers, there is some pent-up demand. Like I said, in the United States, the pandemic is slowly disappearing. That means that people are starting to get out again and do the things that they used to pre-pandemic. We're talking traveling, we're talking going to shows, and just going out and doing things again. All of that usually requires some type of money, and businesses are going to benefit from that. That's a good thing for our economy, especially since consumers are continuing to spend, and they're spending a little bit beyond their means right now. We've seen credit card debt and debt in general jump over the last 6 months or so. Americans are putting things on credit and taking out loans because one, they have to. Some Americans didn't get a big pay raise last year, so they need that additional money in order to buy their necessary goods and services. Other Americans, though, have a standard of living that they want to keep up. And over the last 2 years, Americans paid down a significant amount on their credit cards, so those are basically empty. The bigger fear here with inflation, though, is what the Federal Reserve is going to do with its monetary policy. In March of this year, the Fed announced that it was going to start raising interest rates. And during that same month, they raised interest rates by 0.25%. And the Fed has been extremely clear in the past few weeks. A recession is possible. If rates go way too high, businesses make their prices also way too high, and consumers just don't have any money. Well, that's going to lead to no money circulating throughout our economy. Nobody is buying anything, and 70% of our economic growth relies on consumer spending. The stock market is worried that the Federal Reserve is going to get way too aggressive on inflation. They've talked about raising their benchmark interest rates by 50 basis points during their next meeting in May. And some Fed presidents have called for a 75-point basis hike, meaning that interest rates are rapidly going up. When the pandemic started nearly 2 years ago, the Federal Reserve dropped its benchmark interest rates to 0%. They wanted people to go out and spend, which created a lot of demand. It was a lot easier for Americans to get an auto loan and a personal loan and a mortgage, so a lot of Americans went out and did that. Of course, that created a lot of demand, so now we're running into supply chain issues and higher prices because demand has stayed pretty high. With the Federal Reserve raising their benchmark interest rates, well, they want to eliminate a lot of of that demand. But they have to create a fine line between doing too much and doing too little. Obviously, if inflation continues to go up in the United States, that's bad for everyone because wages aren't going up fast enough to meet it, and Americans just aren't going to have enough money to do anything that they want or need to do. Businesses are going to suffer, and industries like the travel industry are going to get hit hard again. So the Federal Reserve needs to eliminate some of that demand, but they can't eliminate all of it because if they do, then Americans again will not be spending any money. And that is exactly what the stock market is worried about. The stock market is worried that the Federal Reserve is going to make a mistake with its monetary policy. Whether that mistake is not raising interest rates enough or raising them way too high, the stock market is pricing in a mistake from the Federal Reserve. And the Federal Reserve wants to raise its interest rates 6 more times in 2022, and then 3 more times in 2023, and again just once in 2024. So the stock market is expecting a lot of interest rate hikes. That directly hurts a lot of things related to the stock market because businesses are going to have a harder time getting loans and money in general. Americans are going to have a harder time getting a mortgage because interest rates are going up. Now, the Federal Reserve doesn't directly control interest rates in the United States, but they have an indirect influence over them. Banks and financial institutions get their money from the United States federal government, which is the Federal Reserve. So if the Federal Reserve makes it harder for banks to get their money, then banks are going to make it a lot harder for you to use theirs. And we've already started to see interest rates go up in the United States, which has meant the housing market has slowed down. To be clear, the housing market is still way elevated and is not crashing anytime soon, but there are clear signs that a slowdown is coming. Slowing too far down, though, means a recession, and investors do not want to see a recession in the United States. And of course, the Federal Reserve and our United States federal government does not want to see a recession in the United States, so they're going to be very careful, but that doesn't mean that they're not going to make a mistake. And the third and final thing that the stock market is worried about right now is, of course, the pandemic. Now, I know what you're thinking. Nate, didn't you just say the pandemic was completely disappearing in the United States? Well, pandemic numbers are down in the United States, but across the world, they are slowly going up. China has instituted brand new lockdowns in its country and is once again imposing widespread testing of its citizens. This is because they have had brand new outbreaks of the virus. So investors in the United States are worried about how that is going to affect us. Obviously, this whole pandemic really started in China around 2 years ago, and then it spread across the world. So if that was to happen again in the United States, well, that could mean economic lockdowns and then more stimulus and then inflation going up and supply chain issues, and we basically just restart everything. Most experts and investors are confident that we are not going to go through all of that again in 2022 and beyond, at least not with this virus. But what they are concerned with is the supply chain issues and the ramifications of China going into a lockdown. The United States gets a lot of its goods and services from China, so if China goes on lockdown, now all of your companies that do business in China are going to start getting a lot less. This has already started happening, which means even though businesses want to produce more, they physically cannot do that because they can't get the materials to do so, meaning that stock prices are going down and earnings reports are going down too because now they are taking on a bunch more costs. Even a partial lockdown is going to create a lot of delays, and that scares investors here because the United States federal government, investors, the Federal Reserve, nobody here can do anything about it. The Fed and the President of the United States can't fix those supply chain issues, and businesses can't fix them either because they don't have any control over what goes on in another country. They can only sell and create and produce things with what they have in front of them, and that is becoming increasingly more difficult. And it's only going to mean inflation goes up in the United States, putting more pressure on consumers. Like I said, consumers continue to spend, but that's not going to be the case if inflation continues to go up. And with the Federal Reserve increasing interest rates and people spending a lot less money in general, well, that puts you in recession territory. So there is a lot going on in the stock market right now, and the honorable mention is the Russian-Ukraine war. That has created a lot of supply chain issues as well that is fueling a lot of the demand and supply problems here in the US. And that conflict doesn't look like it's going away anytime soon. Energy prices and gas prices in the US are already spiking. Businesses can kind of adapt if the conflict stays exactly the same, but most agree that it's not. It's going to escalate somehow, and eventually things are going to get worse. Now, to be clear, that's not what I'm hoping for. I hope that they find a solution very quickly in order to save lives and money across the world. But businesses have to be realistic. They can't go off of a hope, so they're making adjustments now in order to subvert a lot of the issues caused by that conflict. What this is all ultimately leading to is a lack of spending in the United States. If earnings reports continue to drop and consumer sentiment goes down, then that shows investors and the stock market that the future of our economy is not so great. If the Federal Reserve raises rates regardless and makes a monetary mistake, then nobody is going to be able to spend because inflation is just way too high. And even if they can spend, well, the China problems and Russia-Ukraine issue is still going to exist, meaning supply chain issues are going to prevent people from buying even more. With people buying so much less, that leads to a recession, which is exactly what investors are worried about. And the stock market is not sure how long that recession would last for. The Federal Reserve has said if there is a recession at all, which they're not super confident is actually going to happen, then it would be a very short recession, and it would be nothing like recessions that we've seen in the past, like in 2008. The recession wouldn't be all that deep, but investors and the Fed does not know that, and they can't bank off of that happening because a lot of the issues that would cause a recession are still going to be present, like supply chain issues from Russia, Ukraine, and China, and poor earnings reports because prices are going up too fast and incomes are not going up fast enough to meet them. The Fed can obviously reverse on its monetary policy and spark that demand again in our economy if they need to, but that is not going to help inflation. And while it's possible that that could happen, definitely don't plan on it in the near to distant future. So like I said, this stock market sell-off is likely to continue and have its ups and downs for the next few months until all of these supply chain issues and the Russia, Ukraine, and China situation kind of resolves itself. Investors are going to be worried, and they're going to keep an eye on the Federal Reserve. If the Fed thinks our economy can handle a lot of rate hikes at an aggressive amount, well, then they're going to do that. They want to bring down inflation as fast as possible, but they only have so many tools to actually make that happen. But right now, it looks like investors are pretty much betting on a bad future for the stock market and our US economy. To be clear, nobody knows for sure which direction the stock market and our economy is going in. There are so many different factors that influence this. It's never guaranteed. Something could change tomorrow or next week or next month that completely makes this video outdated. And the decisions that investors are making today might need to be changed because things happen in the future. Obviously, things could go either way. All this is one big bet and one big guess on our United States economy. But now I want to hear from you on this issue. What do you think about the stock market sinking over the last few weeks? Do you think that investors are right and our economy is going in the wrong direction right now? Or do you think that the stock market and our economy is going to flip in 2022 and everything is going to be a lot more positive than it is right now? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.